Ladies and gentlemen, joining us tonight will be Johnny Universal coming all the way from Harrisburg, Southern Illinois, so illy swag town. Can you please give him a round of applause for Johnny Universal, guys? What's up with it? Alright, look, I'm gonna go ahead and I'm gonna break this shit down to y'all. I'm gonna let y'all know how to do this right quick. Now, so let me go on and break that down. So I ain't gonna take up too much of your time, though. You know what I'm saying? Because I got shit I gotta do, you know what I'm saying? So, let me go on and tell you what the market finna be about. Alright, cool. Let me go to the proper phase. Let me go to the proper phase. What I'm about to talk to you guys about, we're going to get into depth. We're going to get into detail. I'm going to really show you how to do these things. Now, one thing that's important that I line this out to you is that the market doesn't know time. Okay, so we only know time. We know time by monthly, weekly, daily, 4 hour, 1 hour, 15-minute, 5-minute, whatever. You know, we know time like this right here. You know, that's how we know time. But the market actually does not know time. What the market actually knows is money. Money is built up through patterns and structure in the market. That's what actually happens. And it happens on any time frame, okay? So what I'm going to show you is actually how to trade the setup in the proper way, okay? So the most important thing about this is that you actually see what I'm showing you. Okay, so you see what I'm showing you, and then I'm gonna actually show you how to trade it. Okay, so I'm gonna show you what it actually looks like whenever you get into the market, before, after, you know, all this stuff. And I'm actually doing this. I don't have any pre-planned setups. Like, I don't want it to feel like I already have it set up. I kind of want to go look at it. It's probably going to take me a little bit longer because I want to go through these things genuinely with us. Because when you're back testing and you're doing these things, this is what you're going to have to do. I'm not going to give a crazy amount of examples because you can just rewatch the examples that I have. But I want you guys to have good enough examples that you can have them, and then I want you to then utilize the information I gave you to go find them on your own, like how I'm about to do them. That's why I said I wanted to like genuinely do this. So it might take me a little longer because like I'm just gonna look at different pairs, different things, and show you like what it looks like when one goes your way, what it looks like when one doesn't. But again, I need you to understand that market doesn't know time. And so like this video is like a two-part system to not knowing time, and to it's actually a three-part video because you got the M top and then the double and the W pattern. Or the double bottom. So it's really important that you understand that what you're trading is the money and the setup, okay? You're not trading time. Like, you're not like, I'm gonna get in at this candle when in the 5-minute candle closes, and then I'm gonna ride it for the next 5 minutes. You know, that's not what you're doing. It doesn't matter if the candle closes on the hour chart or if it closes on the monthly chart. Like, I don't want you to. It's all about volume. It's all about money. The key thing is to understand where the buildup of buyers and sellers are. So in this specific instance, I'm going to show you where the buildup of sellers and buyers are off of an M top and a W. Okay, it's a double bottom or a W pattern, either one. I'm going to show you what it looks like. So the market doesn't know time aspect goes to literally every single next video that I show you. I don't want you to think it's a time thing, okay? Because it's not. It's not like you have to enter off of a specific time frame. There's no real right or wrong. I'm going to show you how to make it easier and to how to help you make money faster and to make money for a longer period of time. But it's not like it's like a wrong thing if you don't do it exactly how I show you, like or that you the as far as the time goes that you enter off of a daily chart instead of like an hourly or something. Like I don't really think it's going to be something like majorly wrong. You're going to see how I explain it. You'll see how I explain it. So the pattern that we're actually going to look for um, is it looks just like this, okay? So an M top is exactly what it sounds like. It's like this, okay? So that's an M, right? And then a W is just like this, okay? So that's a W and an M. Now, in trading, it actually looks almost exactly like this. Oh, before I forget, I'm glad I remember this right now. You can literally tattoo this phrase on your forehead. I came up with this a few years ago, but it's like literally the best thing that I've ever came up with in trading because it's so freaking true. Is the easier it looks on your eyes, the easier it's going to be to trade. What that means is the closer it looks like an M or a W or a three touch or a support or a resistance um, or the exact candlestick pattern or the exact inverted head and shoulders, like the closer it looks to that, the easier it's most likely going to be to trade, meaning that you can see a clear place to put a take profit and a stop loss. Like it gives you a clear zone. And what you have to do is just allow the market to because like you don't have any real control over what the market does. It's just going to do what it does. But what you can see is some setups are going to look better than other setups. That's just like what it's going to be, and these are two setups right here that I'm showing you that are like if you see something that looks like this, and I'm telling you, you're gonna see things that look like this, like there, and we'll find some because I know some that off the top of my head, I know a double bottom one like literally off the top of my head, um, like right now on gold off the weekly that you're gonna see it looks literally almost exactly like that, like literally right there, but the two most critical points in this are here and here. These are the two most critical points right here on both of these patterns. Both of these are this area, this area, this area, this area. It's what starts the pattern. What actually begins the pattern on this, and let me just delete this so we don't get confused. And let's focus on one. Let's focus on this one. This actually begins the pattern right here. That begins the pattern. So this is the starting point of an M top, okay? So for a sell, because what you're actually doing in this market is you're looking for this to make your money, okay? So what we do is we actually ride the coattails per se of the big traders in the market. That's what we do. We step behind them and we trade in alignment with them. That's what we do. So what they do is they create the move down here. This is where they started. They started down here and they shoot the market up and then they collect some profit here off of the move, right? Because they bought it down here. Then they come in, they collect some profit. That's why the market pulls back because there's a collection of profit up here and then the market pulls back like this. Then what happens is the trend essentially resumes and then it shoots to go up. But what happens is you have traders in the market that are betting that the market gets to this high up here, like around here, and they're going to start shorting the market up in this area right here. Shorting means sell. And their guess is that the market is going to come to these areas up here and it's going to do this drop right here. And what happens is when it does that drop right there, that was terrible. When it does that drop right there, what will happen is they get rewarded for this. And so what they do is they enter off of this level. So what happens is they take a sell. And I know you're probably like, what do you mean sell? You don't, that's not how you trade. No, that's exactly how you trade. This isn't stocks. This is, you're trading on Forex. And the thing is, you can trade stocks and cryptocurrency with Forex brokers. So you're actually getting rewarded to enter. You're entering. So I say sell. So you're entering right here. And what you expect is you expect this drop. Okay, that's what you're looking at. And what's happening is that's your target. Your target is to allow the market to push to the downside. This is actually what the pattern looks like if it actually goes. And what you're doing is you're stopping yourself basically up here. Meaning that if the market goes up like this, you're out. You're done. Your position is exited. It's because it negates the MTOP, because you don't want price to go over this line, right? And I say you don't want that in a way of, if you're trading this properly, remember it's about connection. So if it does it, it's what it was meant to do. But it's you're understanding that, oh hey, I got to get out up here. Like I can't keep my going in my trade up to here. Like, you're not marrying trades, guys. You're not staying in trades. Like, once it goes past this point, those of you guys who are like, oh, I'm gonna move my stop loss, it'll come back. No, dude. No. No, that's not getting you anywhere, trust me. Like, literally, look at your trading account. Look at your trading account and then look at your bank account, and you will see that it's not getting you anywhere. So that mindset, that doesn't serve you. So you need to unlearn that and realize that you have to stop yourself up here. Like, that's where you're ending. It doesn't matter if the market goes and, oh, it took my money. It's got my money. No, that it has to. Like, that's how the market moves. Like, you're not going to be right all the time. All the setups aren't going to be the same. So this M top that you see right here, this is what you want. This is what it looks like right here. Now, what I'm going to do is I'm going to redo this, okay? So what happens again, all right? This is the M top, guys. Right here is the M top, okay? What is happening is the creation of the move gets started down there. There is a pullback in price, all right? What you have is these people who bought here and rode the market up have exited, but it also makes room for sellers right here. So what they do is they sell right here. Then what happens? The market, again, it goes up. And what happens is you have a lot of people taking sell positions right here. What they expect from the market, guys, is they expect this type of move to happen in the market. And what happens with MTOP traders is when they take these short entries all in here, in all these levels right here, when they take their short entries in all these levels, what they expect is this move. And what happens is they take the trade. The stop loss is probably going to go like right up here, like this, somewhere up in there. And then they know this is their exit right here. Like, if the money is not in their favor, remember I told you it's all about who has the most money. If the money is not in their favor, then they exit right there and they move on to the next trade. Like, all people are doing that are MTOP traders, they're literally only looking for this structure right here. They don't look at anything else. And they see this right here in the market coming up there, and they're like, oh, short here, short here, short here. They start taking positions just like the huge banks do. Who run the market are banks, institutions, universities. They're the ones who really run the market. They have billions and trillions of dollars that move this market. That's how so much money moves through a day. And literally trillions of dollars moves through this market a day. Trillions with a T. Like, that's insane. Like a day, one day. Like imagine a million moves through it, then 100 million, right? Then you got to get 10 more of those, and that makes a billion. And then imagine you got a billion, and then I don't even know how many more billions you need to make a trillion. I literally don't. Like, I have not a single idea how many billions you need to make a trillion. Is it like, does it go like to 99 billion, 990? Yes. Okay, I do. I'm not good at math. I'm so sorry. You do not have to be good at math to do this. And I could give two shits less about math. I just know how to add up my damn money and trade forex. I'm good. But anyway, $999 billion, and this thing has over 5 trillion a day that moves to the market. That is absolutely insane. The billion or the trillions of dollars that moves through this thing. That's crazy. Like, that's crazy. I'm just sitting here thinking about it in my mind, like a day, what, like in one day. This market is crazy. Nothing touches the foreign exchange market. It's huge how much money moves through it. So when I tell you that we're like on the coattails of these people, they're in control. They're the ones fighting and doing everything. All we have to do is figure out how this actually works. And that's what I'm getting ready to show you on these patterns. So by the way, everything I'm telling you with these M tops is the exact flip of a double bottom. So it's the exact same stuff. So anyway, but I'm going to go in and I'm going to talk about that too. But anyway, this is this right here, and then this is the move right here. Okay, that's what you're looking for right there. It comes up here, boom. That's what you're looking for. You're looking for that move right there. So when you see that, these things happen all the time. Now, there's going to have to be a paradigm shift in your trading where when you do this, it's not always going to look exactly like this. Like, there's going to be ways where it looks a little different. It's not going to be the same thing, and you're going to have to be able to see through these things and understand what the market is actually telling you. Remember, the better listener you are in this market, the more money you're going to get paid. That's just how it works. Literally, that's just how it works. What I'm going to do is I'm actually going to go to, if you guys remember that trade setup I had on USDJPY, I'm actually going to show you what it looks like when something hasn't been completed yet. So I just remember this one because this is actually how an M-top begins, and you're going to see if it actually pans out. Now, I have this thing already marked up, so I'm going to delete this. And I am going to do this right here, and I'm going to shift this down like this, okay, and we're going to look at this thing, okay. So this is the weekly chart, right? This is the weekly candle. Let's pull this back. This is going to be really essential to your trading too, guys. Is this strategy tester and utilizing it to like trading in the right way. Now, if you look at this, see how the market goes right here, and you see this. Now, something I want you to understand is these are called candlesticks, okay? Now, if you look and see how some of them have like these long things on them, and then there's like this full part of it, this is called a wick, and that's called a body, right? All this means is price, this like candle, was fully all the way down there. You see that? This was fully all the way up here. Now, let me just tell you real quick before you're like, huh? What do you mean? Honestly, if I shift this thing to a line chart, do you see that anymore? No, you don't. You won't see it at all. Trading is about money. Okay, do you see this right here? Do you know how many different ways there are to read a candlestick, to read volume? All you're doing is reading volume, guys. Like literally all you're doing is reading volume. I'm actually showing you how and what it looks like to read volume whenever price gets to levels. I'm teaching you how to react to the volume getting to those levels. So I usually use a candlestick chart whenever I'm doing like trading and stuff like that. But that's how I normally teach. But at the end of the day, it's not, I'm actually helping you skip all the bullshit that you don't really have to go through in order to get trading down. I'm actually teaching you exactly what you need to know. Like, you don't have to know what a pip is, what it means, the verbiage of it. You don't have to know like all these simple basic things. You don't have to know that. I'm telling you, they're cool, but they are not essential to you actually being able to read the market. Reading the market requires you to understand where to buy and where to sell. Simple. I'm telling you right now, these people who control the market, they don't care about no damn pip. They do not care about what that's saying. They don't care about this wick. They don't care about these candlesticks. They're looking at volume. They're looking at buildup of volume and what it means. And they're trading these patterns. These patterns dominate the market. All of these patterns dominate the market. They're huge institutional levels in the market. That's what they are. And they absolutely dominate this market, guys. I cannot tell you how much they dominate this market. So again, it is not essential for this. What I want you to understand is what this actually means when these things happen, okay? And you look at that setup, remember I showed you of that M top, okay? Do you notice how it formulates that push right here? You see that there? And then that pullback that I told you about there? That's that move I'm telling you about. And then that's that pullback. This is how it looks in the real market. And then what we're doing is we're wanting it to come up to where? Right here, remember? And what we're expecting is that drop right there. Okay, that's what we're expecting. So when you look at price and we play this, okay? This is what we're wanting price to go up to that zone up there. Now this is the weekly chart. I'm just showing you the weekly chart of what it looks like. Okay. Now see how it's not perfectly exactly how it was drawn out on, whatever I showed you on that thing over there. This is like how it looks though. Like this is the market. It doesn't do it exactly how we want it to. The most important thing though is that you understand this is the beginning phase of this M top and what it looks like. That's that pullback. And what you want is once it reaches this level right here, this is where you're going to enter on positions. Why? Because what you know is that if you're selling up in this level up here, and this is where you're getting in at, you're expecting the market to drop down there. And you get rewarded for listening to what the market tells you and executing that, okay? And then what you're doing is your exit is going to be somewhere up in here. That's your exit. That means that if the market were to go like this all the way through, you're not looking to hope and pray that it comes back down. You're just like, oh, okay, I'm out. On to the next trade. Like there's no emotional attachment to that. That's what I talk about when I say connection. That's what I mean. Like you're not attached to it. You're just like, oh, okay, I'm connected to the market. There's going to be another setup. So again, let's play this and watch what it does. So see how it came down below that line? Perfectly fine. It's not a big deal. Just showing you how this looks and what it looks like. So this is the move. This is the stuff right here. Okay, so price is coming up to those levels, up into that point. You can start to see this is how this goes, and I just have this thing going slower at this level because I want you guys to see. And this is how okay, so see that right there. So see that level right there. Now, this is real time because this is a trade that I actually just did, okay? This is actually one that I just did. You see how, and I actually sold it. Ooh, I sold it right there. But you see how price came up to this level? See how it came up to that point right there? And this, do you see how where it's at? Okay, where it's at in this real time moment. That place is where if price goes in my direction of where I actually took this sell all the way up here. This is the one that you guys seen that I was up like $2,000 on. This is the one that you've seen that if this thing goes my way, I get rewarded for the move down here. And it doesn't mean that it has to go down there. There's nothing ever telling it that it has to go down there. That's the thing that you have to understand about trading, right? You have to get these things. And when you see this, it's all about positioning. Remember in the other videos, the 3Ps, patience, persistence, and precision. It's all about the precision that you get in with the market, because what you're doing is you're allowing for the market to come up in those levels. And from what I've taught you, you're like, oh, this is M top. Oh, this is double bottom. Oh, this is 3 touch rule. Oh, this is the support and resistance. Oh, this is the buildup of price. And so what's happening is you're just reacting off of what the market tells you. So when you see this, that's what it looks like right there. See that? Big move, pull back, market goes back up, and where does it go? It hits that level right there. So what we're doing is we're actually reacting off of this market and understanding what that is. Let me go back. Let's go back and do this real quick, okay? Remember, what's the M top? What does it look like? What is that? What does it initiate? Boom, boom, pull back, entry right here. That's what we're expecting, is that right there. That is the M top. So again, I go back to this again. Look at that. You see that? That is the actual happening of it in the real moment right there. Okay, that's what it looks like. Now, what I love to use, and this is what you're going to see me doing everything, is this little tool right here. It's over here. It's going to be right above the pull down icon in this. And please use TradingView to chart up. Like literally, it's the best thing to use. See this right here, short and long position? Remember I told you I'm selling, so I'm shorting. When you're selling, you use the short. When you're longing, meaning you're buying, you use the long position. In this instance, we're selling. Anywhere right here is an acceptable place, okay? I don't want you to pay any attention to any of these numbers here, to any of this stuff. Do not want you to worry about this. Please do not worry about this. This is just something that I'm showing, a tool that you use to measure, okay? Stop right here is what that says, target. So basically, you could put your stop loss like right there, that high. And you can, like, if you see this wick right here, you can see this little zone right here. I'm usually putting my stop about right there if I'm doing it right. That's what I'm looking at. Now, this amazing thing is going to be in your way 100,000% of the time. Anytime you click off of it and you click back on it, you're not going to be able to see it. And yes, it gets annoying. So when I talk about things, don't pay attention to my hand, like that little pointer, and don't pay attention to the plus that you see over here. Pay attention to the dotted lines, because that's what I'm going to be doing to show things. So this is that point right there. And normally, the move is way down here. Like that's normally. But the only number I want you to pay attention to is this number right here. It does not have to be perfect. Let me please tell you this. It does not have to be perfect. Where it says risk/reward, please get this thing near around 3. This is all you have to do right here. This is how this works right here. So when you're doing this, I want you to do that tool. Take that tool, pull it from over here, and put it over near the high. So if we come over to this, right? If we come over to this, your goal is to get it, around here like that. And then you're looking for something like that when you're doing it. This is what you're looking for. Like I said, I'm not gonna go over 700,000 examples. I'm just going to show you exactly how these patterns look, the feel of them, and where you enter and where you exit at. That's whenever I talked about the entries and the exits. This is what you're looking for. So when price, think about this. When price is, delete, let me just delete everything. When price, let's do this real quick. When price is like right here, look at this. When price is at this level right there, and you see this, what you're doing is you're looking at the pattern and you're like, oh, hold on, this could be the M top. So basically what I'm doing is I want to enter like right around here. Because see, this is the market in real time. It's doing this. So you're like, okay, I want to take my trade about right there. That's what I want to do. So let me get my stuff set up. Let me put this in. And this is why I say, like, I don't sit here and watch these markets. I set these orders in just like the banks do, just like all the people who control the market. And I just put them in. And I'm like, okay, well, this is my exit. And then this is all I do. I set my trade up like right here, like that. Meaning the back of this red means your trade is done, it's out, and you're done with that. The bottom of the green means your trade is out and done. You made your money, you're out. You lose your money, you're out. But again, when you're trading, and we'll get to this later, there's a whole risk management plan and everything. But please do not get ahead of yourself. Look, there's a boom. See that? There's the trade. And then there's the market right there. That was the exact entry that I took. A little bit higher though. But that's it right there. That's an M top, guys. This thing hasn't panned out yet, but that is exactly what you're looking for whenever price reaches those levels. And this would be great if this thing does pan out, because it'll be cool. You know, I might do something. I might like share it or something on social media and be like, hey, you guys remember the trade that I talked about in this? Well, here's what ended up happening with it that you guys seen. It was at $2,000, and if it goes, you know, in the direction, then it'll be cool. If not, if it stops me out, then it does. I mean, there's nothing I can control about it besides the risk that I put in. You know, that's the thing. So that's an M top. That's exactly how you trade an M top, guys. That's what it looks like. Um, let's see. Oh, yes. Yes. We got one on this. I can actually show you another one. So let's look at this. This is pretty cool. There's one that actually happens here on gold. I just remembered this. Now this one is not as easy to spot. Now, if those of you guys who are more advanced, you see the M top already. But this one's not as easy to spot. But I'm going to show you how this pattern actually pans out and what it actually looks like. So in looking at this, right, let's go back and let's look at this. What are M tops? How do we look at this? So you see, again, it comes up, it comes down, it comes over here. This is where you start getting short, meaning you're selling, meaning you're entering in the market, and you're expecting the market to do that. That's what you're expecting the market to do. So this is where you're taking your entries at, okay? Normally people start taking them like this to the very tip of that high over there. That's normally how they start to take them, because this is a very powerful pattern for a drop over here. Your boy had to get a drink of that wet water. He over here, thirsty. Yeah, these videos are going to be longer. I don't even know how long I've been doing this video. So anyway, this is how this looks right here. So now let's go back again, okay? Now, this is actually, I'm going to draw this out because this is actually the M top right here. It goes here, it pulls back, it comes up, and there's the drop right there, okay? That's the actual move right there. So I'm going to redraw this so you can see it. Oops, I didn't mean to do that. So it comes here, it goes up, it retraces down, it comes up like that, and then there's the drop right there. That's it. All right, so let's look at this. Now, this one, it's going to be a little bit harder to see because of how it is, but this is great because you guys need to see this. So when the market is doing what it's doing, you can see, you see that the big move right there? Okay, all you're looking for is a retracement to happen. That's all you're looking for. So there's your little retracement right there. And then there's a pullback right there. And what's going on is, and this is why I say this is harder to see, because you see how the market starts sitting in this level right there. You see that right there? This pullback right here, this stopping point, okay, this stopping point, when the market gets to there, you can start to see that there's that pullback there, and then there's this level right here. And when I do this is where I said this stuff starts to get really weird. Look at this. That's the 4-hour chart. You see how it looks on the 4-hour chart? You're like, what the hell? That doesn't even look the same. No, it doesn't look the same. This is how this works. The market pushes up. The market does the pullback right there. The market starts stopping at this level over here. And this is exactly what you want to happen. I'm going to go back to the daily chart. I'm going to go back to this level right here. And I'm going to zoom this thing in. Okay. We're going to look at this thing on this level. And this is how this thing works. You're going to see that what you're doing when you're doing this, you pull out the tool. And this starts to be your level where you start to see this thing. Where did I say that you put your stop loss? Above the high over there like that. And what you're expecting is this kind of move here. This is 3-to-1 right there. That's your move. But this is essentially what you're expecting off of this level. You start to see these things. This starts to become your entry right here. This is what you're looking for right here. Are all these things. See how the market reacts right there? See this? And what happens is you start to see that starts formulating. Again, I'm going to draw this out like this. Here, here, here. Just like that build up. That's what you're expecting right there. Not your M top. It doesn't look perfect. This is why I wanted to use this, because I knew it was going to throw people off, and the market doesn't do it exactly like you want it. The first example I showed you was one that hadn't completed but looked really good on the eyes. Remember I told you the better it looks on your eyes, the easier it's going to be to trade. This is what I'm talking about. These are exactly the things that I'm talking about when I say this. This one doesn't look as good on the eyes, but when you start to understand these things and see it, that you become connected with the market, you start to say, oh, this thing is starting to show me something. And then you allow it to play, and then you get these kind of moves, and these are the payouts for you. That's what you're looking for. That's a completion of the pattern right there. That's what that looks like when it completes, right? So that's that same thing that USDJPY could do for me, like the trade that I have in, is that. And that's like what your reward is. That's what you're looking for to happen, for price to come all the way down to that level right there. And you can see that. And like I said, they start taking positions. And it's about listening to the market. What you're going to do is you're going to start hearing and seeing what the market is telling you from your eyes. That's what it does. And this is exactly how you trade these M-top patterns and how you do this stuff. This is what it looks like. I want to see if we can do this one. See something real quick. I want to see if this is one here. No, that's not one. I just wanted to see if there was a good M top, but I'm not trying to get you guys confused in any other pattern, so there's not. So what I'm going to do is we're going to flip it. We're going to go to the double bottom now. Okay, so we're going to go to the double bottom pattern, and we're going to look at this. So those M tops, that's how you actually trade those M tops. And remember, price doesn't know time. So what I just showed you, you can do that off of a monthly, off of a weekly, off of a 5-minute, off of a 1-minute. It doesn't matter. What matters is how you trade the pattern, guys, and what you're looking for. So when this thing comes up, that's what you're looking for right there. You're looking for that move, right? You're looking to take those positions once it reaches that level right there. That's when you're looking to start selling, okay? And the thing is, here's what I'm going to tell you. The bigger the time frame is, the bigger the possible move can be, okay? So that's extremely essential that you understand that the bigger the time frame is, the bigger the move can happen. So if you're trading on a minute chart, you're going to probably get in and out of the market really quickly, and it may not be the smartest thing to trade on the minute chart, because what the market does is it collects orders off of the smaller time frames, but there's a time and a place to trade those smaller time frames. It's not a time and a place to trade it in the middle of consolidation. For those of you who don't know what that means, I'll teach that later. But that's not a point in time whenever you want to do that. So it's extremely essential that you don't just trade the smaller time frames without proper positioning. Okay, those bigger time frames are going to give you so much more movement because they hold so much more structure behind it. Okay, so it's really important that you understand that when you're doing it. So yeah, I wanted to say that there. So again, that's the M top. This is where you're taking those positions. The double bottom, when you're doing the double bottom, when you're taking the positions, you're taking these positions down here like this. This is where you're entering in at the market, and you're expecting, you're looking for that move to happen. That's what you're looking for. Okay, so now I'm gonna go over the double bottom. So it comes down like this, it pulls back, and it goes here, and it's the same thing as the M top, guys. No different. It's just a flip of it. Like literally, you flip that pattern, it's the same exact thing. You're taking the positions, you expect it to go there. So let's look at a pattern. There's one on gold. I remember this thing actually. It happened. It's crazy. It's like the most perfect double bottom ever in the history of like double bottoms, literally. This thing is like solid. It's like so good. Look at this. Look at this double bottom right here, boy. Look at this thing. Look at that. Look at the double bottom, bro. That's like perfect. So perfect. I remember this thing. I actually sold it like up here. I think I made like, I think I made like 40 G's on this trade, like right here. From right here to right here. This is pretty cool. It happened like in a day. It dropped like from here to here. And I had like 20 lots on it or 15 lots. I can't remember what I had on it, but it was pretty cool. Dropped down in one day. But look at this. Here. Okay. This damn pad, I swear. I'd be looking like an idiot drawing this thing. Here, 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 boom. There's the move. You see that? That's the move. So what's happening is when this pattern, when this thing is happening, what you're doing is you're wanting price to reach this level down here, and then you're taking your positions. Well, probably not that high up, smart guy. Yeah, you're taking your positions down here like this. That's where you want to get it, and you're exiting like right there, guys. I wouldn't say that far on a daily chart. But that's, you get the gist that like you're not going to hold this way beyond, any kind of level. You're not going to do that. So when we go look at this, let me show you what this looks like whenever you're actually taking the trade. So when price, is here at this level, okay, you're allowing price to do what it needs to do. So it goes to these points, and you're seeing this. That's the big move to the downside. See how price is pulling back? It's retracing up. You see that? See how it's retracing to the upside? So what's happening is when these things happen here, it's pulling back, and what's going on is you're starting to see like, oh, price is starting to push up and do this. So what my expectancy is if price comes down here, I want to enter off the market, and I'm expecting that. So when we do that, let me back this thing up a little bit. When we do that, here, what are we using? Our tool. So we come over to here, and you're like, okay, well, this is pretty much where I'm going to enter at, is around there. And then, I'm pulling this thing up, and this is pretty much where I'm going to exit, is down there. See how like the back of that red is down there? And again, I don't want you to get caught up in like all the numbers. Besides, the only number I want you to look at is that number and making it to be 3. You see how the number changes when you do it like this to that. See how it changes? So you just get it down. Look with your eyes. Look over here, and be like, is that red far enough away from that wick? Yes, it is. It doesn't touch it. And then you take your green and you're like, okay, does it give me that 3-to-1? Okay, cool. That's all I want you to practice. Literally doing that. It's like literally that simple. You don't have to do anything extra. Allow the thing to play. And what you're doing is you're letting the market reach that level, and then that's your entry right there. That's what you're doing. That's what you're waiting on. And then the market again, it rewards you for following the pattern. That's what it does. It rewards you. So when you see that, you can see the market going to the upside and pushing to the upside. All you're doing is just literally listening to what the market tells you. That's it. You're literally listening to what the market tells you. Nothing else, nothing extra, nothing special or anything like that besides simply listening to the market and what it tells you. That's it. And that's the move. I mean, you see, it's not doing anything else besides going to the upside. And that's what you want. That's what you want. So let's go back and say when we're back at this level right here, if price comes to this point here and it goes to this level, and say it hits that point, and say price keeps going through like this, I want you to understand that there's no right or wrong in doing what I'm teaching you, okay? It's not like you're right or wrong of what happens. Remember, I told you the market is about connection, it's not about attachment. So just allowing the market to do what it was supposed to do in the first place is what's going to happen. So it's all about who has the most money. So think about it like this. If the sellers are stronger, they're going to push price through this point and the market's going to keep dropping. That's just what's going to happen. Like there's nothing else that you can do. There's nothing else you can control. They're stronger, the buyers are not, and it's done. If the buyers are stronger, they will take position right here strategically. Everything I'm showing you is strategic. Strategically take entry right here. And then what will happen when they strategically take entry? The market goes up and the buyers get rewarded. Do you understand that the sellers aren't rewarded anymore? The buyers get rewarded. So do you understand that people who are looking to sell this thing, they're not getting rewarded anymore? It's not a seller's market, it's a buyer's market. So the buyers are winning, but it's a pattern that dictates them winning. You feel me? That's what it is. So it's important that you understand that and what that means, because when I'm telling you those things, the market is just reacting based off of what it knows. That's it. Based off of what price is telling it and based off of the buildup of traders, it's just doing it. It's not doing it based off of anything else besides money and volume and the buildup of volume. That's it. So it's important that you guys understand that and that you see that, because these things are so essential in trading, especially in pattern trading, especially in these M tops and these double bottoms. It's absolutely so essential. These things happen all the time off of literally every time frame. It's absolutely ridiculous. If you want to see one, actually, I can show you one right now. In price, let's see. Let me show you a double bottom that did not pan out. Okay, look at this. This is one that's actually currently happening that has not panned out, right? So pretty much here's the move right here, right? That's the move. And then we're looking for a pullback, and then we're looking for price to come here, and then we're looking for that right there, right? So you notice that price went down, there was a pullback. So what are you doing? You're taking a trade and you're saying, okay, well, this is where I'm taking it. This is pretty much where my stop loss is going to be, like right there. And then, I'm expecting price to go up and through to that level right there. And so price comes down to that point, and then see how I hit that level? See that? That's where you're getting in at, right there. See how that looks? That's it. That's your pullback. Boom. There's the double bottom right there. This is that. This is a 4-hour chart. Remember I just showed you one on a daily? Now watch. This happened. Well, it ended. But do you see how it's basically about to hit the stop loss? You see that right there? This is one I remember watching this on Friday. I didn't take any trade, um, but this is a level right here. This is what actually happens, and you see this. Look at this. It comes down. It's not panning out. You can see that it's not panning out at that level. You comes down. This is what you're expecting it to do, is that, and the market goes against it. Who's stronger? The sellers. They have more power. So it's not necessarily that the 4 hour time frame is not a good place to do double bottoms. It's just that there's more power in the selling right now, and that's what I talk about when I say connection. So remember that. It's so essential, guys, that you remember that you understand that you connect to that, and that is how you trade these double bottoms, these M tops and these W patterns. These things are literally all over the market at all times. It's insane how they're all across the market. I'm not going to spend a crazy amount of time trying to go through these things and find them. But they're everywhere. Like literally, they're everywhere. There's a double bottom that happens right here off of us. You see this right here? See how price? See, like they're when I tell you they're everywhere, they're everywhere. It pushes down, it pulls back, it comes over, and then there goes the move right there. That's one right there. They're like literally everywhere. You will find them everywhere. Like that, I cannot even tell you when I say that they're everywhere. I mean, you just start finding, you'll start seeing them like all kinds of places. This is an M top right here that didn't pan out. Price comes up, price pulls back, price goes up to here. We're expecting that. What did it do? It shot up through. That's one right there. It's not that it was wrong or anything like that. It's just that the market didn't pan out. So you got to understand, you don't win 100% of the time. It's all about the system that you create with your stop loss system, with your entry exit system, and your risk to reward system of what's going to make you money. But you're not there yet. So don't worry about it. We will get there soon. So again, practice these patterns, go through, look at these patterns, find them. They're everywhere. And just start watching and looking at them and be like, oh, okay, this is how it looks. And you just have to, guys, it's all it is practice. It's not overwhelming. It's not anything like that. You just have to give it time and you will get all of this stuff down. But this is something that I wanted to put in here, all these patterns, because I know that there's pattern traders out there. There's people out there that want to do different things and have different things. And this is why I include this in my academy, because it's a very popular trading strategy, but I love it. I absolutely love it. So we're going to move on to the next video in the patterns. So I am going to see you guys on the next video.